think. That's what I usually do, yeah.
I would like a petition to get Starbucks or Dunkin' Donuts Prairie. Coconut milk or almond milk?
Yeah, I know. Like, I don't drink soy. I don't use soy.
They have soy milk.
I know, but I don't use soy. I get a headache from it.
Really?
A headache.
Can I tell you? I was a big.
I can't do that.
Once you stop it, I don't miss it at all.
The broadcast is now starting. All attendees are in listen-only mode.
Okay, I'd like to welcome everybody tonight to the NAA New York Metro Westchester chapter meeting. We have here with us Kim Mack Rosenberg, who is also our president of the NAA New York Metro chapter, who will be co-presenting tax deductions for special needs families. And also we have with us Mark Berger, who's a CPA, who will also be co-presenting with Kim, and we thank you both for being here. Lots of good things happening. Please go to our website at www.naanyc.org for upcoming events. There's lots of them. I don't even think I could rattle them all off, but go to our website. There's a lot of great things happening. And for folks here at the Westchester location, there's a calendar of events over by the materials table, and thank you all for coming. And I'd like to give it over to Mark and Kim, and if anybody has any problems with the audio or any issues, please feel free to type it in on your screen out in webinar land, and we'll correct whatever we need to. Okay, thank you. Go ahead.
Thank you very much, Lisa, and thank all of you who are here tonight and all of you who are tuning in online. We appreciate you joining us. So I'm going to start off with something that's not going to be news to anyone here, is that autism is challenging. Autism spectrum disorders present a host of challenges to families, including monetary challenges, and those financial strains can be a real burden on a lot of families. So financial planning is critically important. And a key component of that is tax planning and understanding what deductions are available to you, particularly medical deductions for your family. We know that many people with autism spectrum disorders have significant medical issues and require significant specialized assistance and treatment, including therapies like speech and OT, medical and nutritional specialists, private schools for some, medications and supplements, special diets and other biomedical treatments, assistive communicative devices, specially trained caregivers, and autism service dogs. And those are just a few. So we all know autism is very expensive. The various forms of assistance and care that our children need cost a great deal of money, and it's often not covered by insurance or not covered in full. As a consequence, parents often spend a significant amount out of pocket in order to pay for treatment for their children. So we're here tonight to talk about the tax puzzle and to help you answer a few key questions. Are any of your expenses tax deductible? What are the limits on that deductibility? And how the heck do I organize everything so that I can actually take advantage of the deductions that are legally available to me? So I'm going to turn it over to Mark to first talk about the deductibility issues, and then I'm going to come back in a little while to talk a little bit about the organizational pieces. Thank you.
Welcome everybody here, and thank you for showing up, and welcome everybody out in webinar land. We're going to start by first going over the definition of what a medical expense is in order for it to be a good tax deduction. So medical expenses are the cost of diagnosis, cure, mitigation, treatment, or prevention of disease, and the cost for treatments affecting any parts or function of the body. Generally speaking, medical expenses must be primarily to alleviate or prevent a physical or mental defect or illness. Generally, medical expenses must be an expense that is medically necessary, and it would not be for your general well-being. In the handout or in the slideshow, we've inserted Pub 502, IRS Pub 502, which is a detailed listing of by the IRS explaining the medical expenses. And if you look at the handout, you'd see there's a listing of what the standard medical deductions are, and we'll go through that, as well as the ones that are more unique and more specific to the autism community.
And that pub is also available on the IRS's website at irs.gov if you want to get a full copy to download.
So, moving along with the slideshow, medical expenses are expenses paid during the tax year, regardless of when the medical care was given. So, to elaborate on that, it's not when you saw your doctor or when you had the medical treatment, but it's actually when you actually physically paid for it. The one exception to that is credit cards, and we'll go into it a little bit further in the presentation, but the one exception to that rule is if you go and see a doctor and you use a credit card to pay but don't physically pay the credit card bill until the following year, it's when you use that credit card bill when you actually can take that deduction. Whose medical expenses am I allowed to deduct? Okay, it's important to note that when thinking about medical expenses, everybody's always focused on our children because that's where we're incurring the most expenses, especially in the autism community. And it's important to note that it's really a family concept, so it's important to think about that it's not only the expenses I'm incurring for my child, it's the expenses I'm incurring for myself, my wife, my other child, and then there are others that you can take, and it's more specifically defined as to who are the what we'll call medical dependents, and the IRS pub, and we've inserted who would qualify. It's generally yourself, a spouse, a dependent, a qualifying child, and those are the main ones. And then there are certain additional ones, qualifying relative. In certain cases, you pay medical expenses for your parent or a brother or sister. One thing that it's always important when you're paying medical expenses for someone else, it's important if you need that medical expense for tax purposes, you should not give them the money and have them pay the doctor or whatever the medical expense. You should pay that medical expense directly. It solidifies that medical deduction. Okay, so now we're going to get into some of the specifics of which expenses are includable. In the IRS pub 502, which we keep referring to, pages 5 to 15 detail which expenses are deductible. It's not an all-inclusive list. It's just a list, and if you could fit your expenses in there, they certainly are deductible. And I'd like to go through some of them without having to go piece by piece, but the pub is there. Abortion, acupuncture, these are all expenses, medical expenses that you're incurring to cure these things or to deal with these items. Alcoholism, artificial limb, teeth, the dentist, birth control pills are good. And all these expenses are here, but I'm going to skip along because I don't want to go through. They're all there for you. I want to move along. You going to follow me along in this? Okay?
And we just want to make a program note that we are recording this audio, and you'll have the slide presentation also available shortly with the audio of this presentation, just for people in the audience today and people in the audience in the webinar.
Okay, so
Thank you.
what I'd like to do is I'd like to go through some of the general rules. I'm going to skip ahead to page 10 in the handout, which is the 7.5% rule. Okay? So in general, the rule is once you've identified which medical expenses are deductible, you have to have incurred medical expenses in excess of 7.5% of your adjusted gross income for there to be any tax benefit to you. If your expenses are greater than 7.5%, then you get a tax deduction, and it's an itemized deduction on your return. Generally speaking, AGI is all your income. It's your adjusted gross income, and it's, you know, line 38 on your Form 1040, but in layman's terms, it's really all your income, all your gross income. So, for example, if your adjusted gross income is $100,000, the first $7,500 of medical expenses are not deductible. One thing to note that recent law, effective January 1, 2013, medical expenses, that this threshold is going to change from 7.5% to 10%. Okay, and it should be noted, as I told you before, it's when you pay for the expenses that determines when you get to deduct it. So there will be an opportunity as you reach the end of 2012, whether you think you should pay for something in 2012 or 2013, because you might determine that you think you've incurred a bunch in 2012 and maybe you won't incur as much in 2013, and you might want to prepay certain of your medical expenses because you'll get the benefit and you wouldn't get it in 2013.
So just to clarify, and I know we're going to hold questions to the end, so if I had, in this example, $10,000 worth of expenses, medical expenses, 2,500 of it would be deductible?
Correct.
Okay.
The first $7,500 are not deductible.
Thank you.
No problem. One thing for those, I'm going to skip ahead to this AMT slide. For AMT, for those who know what AMT is, it's alternative minimum tax. It's a separate calculation when doing your tax return. For those people who have certain itemized deductions, mostly taxes and real estate taxes, you have to add back. It's a separate calculation to try and catch you with the bad word AMT. I'm sure some of you have heard it. Some of you may have not. Medical expenses, the next 2.5%, so 10% of your medical expenses are not deductible for AMT purposes. So for those people who are an AMT, it's really the threshold that you should be thinking about is 10%, not 7.5%. So
that's currently 10%.
that is current. That's the rule. So what I'd like to do is I'd like to now go through a lot of the medical expenses that really are unique to the autism community, to the special needs world, not just autism, and just go through them. Tuition for a therapeutic school generally will qualify as a medical expense. That's a big one. So if you're sending your child to a therapeutic school, and the main reason why your child is going to that school is to deal with whatever special needs your child has, that tuition will be deductible. Some legal fees are deductible. Legal fees incurred in trying to obtain services or tuition reimbursement from the Department of Education have been ruled to be non-deductible medical expense. Legal medical expenses that are typically deductible would be if the legal expense is essential to getting the services. The reason they've ruled against it in reimbursement cases is they said it's not essential in getting the medical expenses, it's just essential in getting reimbursed for the medical expenses. Supplements recommended by a medical practitioner to treat a medical condition diagnosed by a doctor may be deductible, but supplements taken for general good health reasons are not deductible. So for those of you who go and see special practitioners and your child is taking all types of supplements and are on biomed treatments, it is my recommendation you get as much as you could documented from your practitioners. Give them to give you a letter saying that it is essential for medical reasons, and I'm sure there is a good medical reason why they're telling you to take all these supplements, and that will get those medical deductions to be good medical deductions and should not be questioned. As a general rule that I tell my clients and the people who ask me about this area, I say your doctor and your practitioners have to be your allies and your friends. Get as much as you could documented from them. So a lot of the stuff that you're doing, have your doctor say, give you a letter. You've done all this testing. X, Y, and Z is critical to the treatment of your child and is medically necessary. And when in doubt, over document. And as I said, have your doctors, neurologists be your friends and allies, and it'll go a long way in getting certain deductions that might otherwise be in that middle ground of deductible or not deductible to be without question a deduction. So that's something that I truly recommend and is essential.
Do you have to submit those letters from your physicians?
The question is, do you have to submit those letters with your return? And the answer is no. The way it works is whoever's preparing a return, you might be preparing yourself, you put it on your return, you keep these letters and your backup in a tax file, and if you ever get audited and have to present it as evidential matter, then that's when you'd need that piece of paper. Okay? Homeopathic treatment, again, as long as it is prescribed by a medical doctor, it should be deductible. So, again, I'm going to repeat that point over and over. Chelation therapy costs, the cost to chelate metals and so on and so forth, again, as long as it's prescribed by a doctor, should not be a problem taking that. Therapeutic toys, tools should be deductible. Again, I would recommend it being accompanied by a letter from a doctor.
An OT letter too.
OT letter, just as much documentation to support why you're using that therapeutic toy. I'm not telling you to take every doll and every toy and every this, but the real big ones I would recommend taking. Lab fees, including those for specialty labs, should be deductible. Fees for non-U.S. medical providers should qualify as long as the testing is prescribed by a doctor. HBOT, hyperbaric chambers, again, get the letter from the doctor, your child has inflammation, and the reason that you're going into the hyperbaric chamber is to fight off inflammation. Or whatever the medical reason is that your doctor might have, but I think that's why they typically prescribe HBOT treatment. Conferences, okay, such as the NAA annual conference or Autism One. The conference fees and the transportation to and from the conference are includable medical expenses. The meals and lodging at the conferences are not includable medical expenses. Lodging and travel expenses to receive medical care in another city may be deductible within certain limits. So if you have to travel to another city to see some specialist, should be deductible. There are certain limits and guidelines that limit the deduction. They give you a certain per night for lodging. I think it's $50 per night lodging per person. The main purpose, in those cases when you go traveling, the main purpose of your trip should be for the medical reason. So if you were going to see a doctor in Orlando, but really you wanted to go to Disneyland with your kid, but you wanted to slip in a medical visit, I would say, I don't think so. But if you were going to Orlando and the main purpose of your visit was to go see this specialist and really that's what you went to go do, then it should be good. Transportation expenses incurred in connection with medical care are deductible. As far as transportation costs, car expenses, you can include out-of-pocket expenses such as the cost of gas, oil when you use a car for medical reasons. If you do not want to use actual expenses, you could keep a log and you get a mileage rate. The mileage rate for 2011 it's a bifurcated year, so there's two rates. It's 19 cents a mile for the first half of the year from January 1st to June 30th, and 23.5 cents a mile for the second half of the year. You can also include parking fees and tolls. Please note that, as I told you earlier, a therapeutic school is a good medical expense. So when you drive your child to and from a therapeutic school, it's as if you're driving them to and from getting medical expenses. Those are good. So I recommend keeping a log, keeping track of the miles, you know, wherever you're going to see specialists, you're going to, whenever you use your car. For those that don't have cars, if you use cabs and buses and trains and what have you, I would keep a log. I would also recommend, as a general rule, to if you're using cabs, well, in New York City, you could now use credit cards to pay for your cabs. I would recommend, in most cases, when you could, not to pay cash for your medical expenses and to use either check or credit cards. It's better forms of documentation. Books to help parents understand and help their special needs child should be deductible along the same lines as conferences. So if you're buying all types of books to, you know, solve this big mystery of autism, those should be deductible. I know many children on the spectrum are on special diets. The tax courts have allowed the cost of special food, the cost of the incremental cost of special foods over the normal cost for a normal diet when this special diet is prescribed by a doctor. So to explain that a little bit further, your child has been diagnosed to have a gluten allergy. I'll use that as that seems to be the popular one. The incremental cost of certain of the items, as you know, the gluten-free stuff is more expensive than the regular stuff. So, for instance, if you use gluten-free breadcrumbs, could be twice the cost of regular breadcrumbs. So it's not the cost of the gluten-free breadcrumbs, but if a gluten-free package of breadcrumbs is $5, and that same package would have been $2, $3 would be a good deduction. So it's the incremental cost. And I know Kim is going to speak further as to how she keeps track of it and her method and some suggestions there. An iPad that is used primarily as a communicative therapeutic device for an individual with autism may be deductible as a medical expense. So again, along the same lines as I told you about therapeutic toys, I would recommend getting if you're using the iPad as a communicative device, I would recommend getting it from your speech pathologist or from your neurologist. That it is essential that your child have this iPad to use to help communicate. But if the reason you're getting this iPad is because you want to keep your child busy and not bug you, I would say then the deduction won't be a good deduction. You know, just we'll put a few autism apps on there, or we'll put an app on there. But for the most part, the kid is just playing around with it as a toy. It wouldn't be a good deduction.
Not as a therapeutic toy?
Not as a therapeutic toy. Maybe.
They're watching YouTube videos.
So, but you know, for a child who's on the spectrum, who really needs the device to communicate, I don't see it as a problem. Taking the cost of the iPad, and in some cases, you know, paying for the monthly cellular data if you need it as an essential way to download some of the apps that are being put on the iPad. But, you know, again, there's a judgment call there. The cost of apps which assist an individual with autism using an iPad, such as Pro Loco to Go, would be deductible. And I know there's all types of special autism apps. The cost of those certainly would be deductible. An autism service dog may be deductible as a medical expense if the dog helps its owner minimize the effect of his or her disability and helps the owner perform everyday tasks. The IRS has allowed the cost of buying, training, and maintaining a service dog as a medical expense. Here's one that also gets close to the line of deductibility and non-deductibility, is therapeutic summer camp. So therapeutic summer camp may be deductible for children who require year-round therapeutic services if the camp provides such services and your doctor, neurologist, child psychiatrist prescribe it as essential. So for those children who are in a 9 or 10-month program, and I would say, and you want to send your child to a therapeutic summer camp, get a letter from your neurologist, your doctor, whomever you're looking to, you know, who's administering the care of your child, and say that it's essential that your child have continuous services, and you're getting these services at the camp, so in those cases it should be deductible. Typical of mainstream classes, such as martial arts or swimming, recommended by a therapist, may be deductible so long as the class is considered essential to treating the child's condition. Once again, you should get a written recommendation from the child's doctor stating as such. Classes, lessons to improve general health are generally non-deductible. Okay, so that is our list of deductions, medical deductions that we think are somewhat specific to the autism community. It's not all inclusive, but we think we've covered a lot of the big ones. Other things to consider, okay? As I told you earlier, when thinking about medical deductions, it's a family unit expense, but there are things you could do that might help you maximize the deduction, such as married filing separately. So in situations, and I think the situations that would work best is you have a 2-earner family, and generally you might have pretty close in earnings. You take the deduction, and you have one of the spouses pay the medical deductions and try and get all the medical deductions on that person's return, and therefore you're going to get more bang for your deduction because you're eclipsing the 7.5% rule that I discussed earlier at a lower income level. But, you know, it doesn't always work out. There are higher rates, and there are other things to consider. So it's, I tell you this, you should mention it to whoever prepares your returns, that something that they should consider is, hey, how would married filing separately help me out here? Or is that something I should consider in the future? Reimbursements. Generally reduce medical expenses in the year the reimbursement is received. In some cases, reimbursements may be taxable, okay? This is particularly important for large deductions, such as tuition reimbursements of special needs schools. So in situations where you might pay for your therapeutic school in one year, take the deduction in that year, and get the reimbursement in the following year, you got to be careful because you could get a little whipsawed there, and you might have a deduction in one year, income in the next year, and it's possible it could be it could be a disadvantage to you to even taking the deduction. But you just got to be careful because when you're getting that reimbursement, you might be at a higher income tax rate than when you took the deduction.
Now, one thing I think we've talked about before is if you don't take that tuition deduction, for example, because you anticipate getting reimbursed probably the following year, you have 3 years to go back and amend a return. So if you don't get that reimbursement.
Correct. You wouldn't have to report the reimbursement if you never took the deduction, is
Right.
your point. Other reimbursements, such as insurance reimbursements, generally reduce your medical deduction. You can only deduct what you, on a net basis, have paid. Employer plans. The one thing I would always recommend to somebody is, even before dealing with medical deductions, is to figure out what's the best way to get my medical expenses paid for with pre-tax dollars. So if your companies that you work for offer certain flex spending plans, I would recommend to strongly consider it, because that is a good way to, you are essentially getting that deduction without ever having to deal with this 7.5% rule, and you are essentially paying for medical expenses with pre-tax dollars. So if that is offered, I would strongly recommend that as a good way to pay for medical expenses.
That's a question. They're changing the limits on that, aren't they, in the next couple of years?
Yeah, I don't know what the limits are, but yes, they are.
They were like 15,000. I think they changed them in like 25 years.
I'm not certain what the limits are. I could certainly follow up. And insurance premiums paid with pre-tax dollars are not deductible, which is the case for many employees. If you are self-employed and you pay the premiums yourself, this is it's a different treatment. It's not a medical expense. You get an above-the-line deduction, not subject to this whole 7.5% rule. So that's for those people who are self-employed and paying their own insurance.
I don't understand that statement you made before. You talked about that, about insurance premiums. I'm retired, I get my insurance for free, but my son and my husband, I have to pay 4 times a year, every half a year, to my ex-employer so that they can get coverage. Those premiums that we pay, those are covered.
Yes, those would be medical expense deductions.
Just repeat that.
I'm sorry. The question was, if you pay insurance premiums on your own, are they deductible as medical expenses? And they are. They're medical expenses. I was just highlighting if you were self-employed, you had your own business, it's a different treatment. You get it before this 7.5% threshold. If you pay the premiums on your own, it's a medical deduction subject to that 7.5%.
Right. The real issue when you don't deduct it is when you're an employee and your employer takes out your medical premiums prior to tax, so it's not part of your taxable income.
Oh, that's what I didn't understand.
Right. It's paid, as I said, it's paid with pre-tax dollars. Okay? So I've been sitting here telling you about all these medical deductions and giving you suggestions. I also want to tell you what is the quickest way to get those the benefit of these tax deductions in your pocket as quickly as you can to essentially help you pay for this, a lot of these expensive therapies. So for those people who are salaried employees and receive, they get paid and they have a W-2, they're W-2 salaried people, I suggest adjusting your, if you're incurring a lot of medical expenses, I suggest adjusting your W-4 to incorporate a lot of these anticipated medical expenses. So therefore, you'll get more money on a weekly or biweekly or however frequently you get paid. You might not get a refund at the end of the year, but you're getting your refund all year long. So essentially, you're not giving the government an interest-free loan. Okay, so
You would do that by increasing your number of deductions.
by increasing your withholding, by decreasing the amount that's being withheld in your paycheck. Okay? For self-employed people who pay paying with estimated taxes, I would suggest adjusting your quarterly estimated payments to incorporate once again the anticipated benefit of this medical expense deduction. One thing that Kim just highlighted before, and I'm just going to repeat, for those people who are sitting in this room and saying, wow, I wish I had known this 2 years ago. I incurred so many medical expenses. I forgot to give it to my accountant. Well, you have the statute of limitations on filing amended returns is 3 years from the date that you filed your return. So if you filed your 2008 return, as an example, April 15, 2009, you have until April 15, 2012 to go and amend your 2008 return. So essentially 2008, 2009, and 2010 would still be open. You have 3 years that are usually open at once. Okay?
And that can make a big difference. For example, if we go back to the tuition
Correct.
Issue, if you have a child in a special needs school and it's $50,000 or $100,000 a year, and you fully anticipate that your school district is going to reimburse you all or a good portion of that, you don't take the deduction because you're worried about counting reimbursements as income and that kind of thing, you don't take the deduction, the following year you have a hearing against your Board of Ed and you don't prevail and suddenly you're out of pocket $100,000, you can go back and amend, or they pay half of it. You can go back and amend and take the other $50,000 as a deduction. So you don't, as long as you do it within the 3-year period, you don't lose that deduction.
That is correct. That is correct. Good point.
I have a question about something that you mentioned early on, and that was about legal expenses and how you could deduct expenses you paid an attorney because you need an attorney to get the services from your school district. And there was some confusion about when you could and when you couldn't.
The point was legal expenses that you're incurring to get reimbursed. In other words, you're suing your school district to get reimbursed. So the reason that you're incurring those legal expenses is to seek reimbursement, not to seek medical expenses. Then in that case, it would not be deductible. But if you were incurring legal expenses, let's just say your insurance provider it says that you're not covered, and well, maybe that might not be the legal expenses that are essential to get those medical expenses would be deductible.
If you need to get a residential placement for your child or your adult child and you're not successful in getting that placement, for example, you may need to retain a lawyer in order to obtain that placement. That's not like retaining a lawyer to receive reimbursement for educational expenses.
That's correct.
Well, the reason I'm asking is this year, after 5 years of trying to get my school district to provide my son with reading support, I finally threw up my hands because his evaluation verified that he was in like a 1 percentile or the 8th percentile in reading. And he's in 11th grade, so there's only 2 more years to learn to read properly. He's reading at the 6th grade level. And I finally said, I'm going to get an attorney. And I paid legal fees to get, they came with me to the CSE, and the school district said, how much do you want, how often? And they gave him more reading services than, because he never had any.
Well, I would say in that case, you've retained legal services not to seek reimbursement, but to get medical expenses. And I feel, in that case, I think it feels more in line with the deduction.
So it's allowable. You'd say in that.
I'd say it feels like a good deduction.
How about when you go outside of the school district and do your own private evaluation of your child because you want someone to help?
So you went to say you went to a neurologist to get an evaluation, or a speech pathologist. I think they're all good deductions. Okay, so that will conclude the first part of our presentation, which is going through all the nuances of the tax deduction. My partner in crime, Kim, is going to take you through some of the record keeping and filing and what you should be doing to help substantiate and manage the process.
Absolutely, and this is an important part of the process because, as Mark has said, you need to be doing things like gathering letters from your doctor, you need to be saving receipts, and you end up with a lot of paper.
And just one thing to remember, that when you go ahead and you take a large medical deduction, you are subjecting yourself to some audit risk, because if the medical deductions really stands out on your return, and it really could, because some of these expenses are just so expensive, it might be questioned, and you've got to be armed and ready. And I think Kim is going to lay out a presentation that will help you be prepared.
So one of the things we always tell people is that even if you don't think you're going to qualify for a medical expense deduction, you think your income's too high and you're not going to make the 7.5% or 10% bar depending on AMT, especially in today's economic climate where people are unexpectedly losing employment or their salaries are reduced, you could have a change in circumstances within a tax year and suddenly find that you can avail yourself of those deductions, and in fact, if that's your circumstance, it may be a real benefit to be able to take those deductions. And as Mark said earlier, even though we're really talking tonight about deductions for children with special needs and in particular autism, you should save your receipts for all family members because everyone counts toward that 7.5% bar. So if I see a doctor and have, several $1,000s in medical expenses, my husband has medical expenses, all those go together to help reach that 7.5% bar. We've talked a lot about the doctor's letter, and we'll keep hammering this home. Should be in your tax file. You may need a letter from more than one provider. So, for example, if you have an iPad for your child and it's their assistive communicative device, or you use it for social stories or other apps that are autism specific and help your child, you may need that letter from your speech therapist. There are actually some apps on the iPad now to do fine motor skills, and you can get something from your OT. You often can get your pediatrician to provide sort of a general letter, but some pediatricians may be unwilling to provide letters about some more esoteric treatments that your child may be undergoing, so you may need to get a letter from a specialist to help with that. One thing we also suggest is drafting a letter for your doctor, having the doctor review it, make any changes he or she has, and then having them sign it. If you can make it an easier process for your doctor is more likely to go along with giving you the letter. And they want to do this because they want your children to get the help that they need, and this is a way to assist families doing that. But if you make it easier for them, it's easier for everyone. So I'm going to walk you through what to do if you have your receipt from your doctor, your therapist, your car log that Mark talked about, and we're going to talk more about that. What do you do with it? So the IRS actually has rules about what they want you to keep and what they're looking for with respect to record keeping. If it's a doctor or a service provider of that type, they want the name and address of the person you paid, the amount and the date of each payment, who received the medical care, generally, what the nature and purpose of the medical deduction is. Some of them, may be obvious, others less so. You have a receipt from your OT, your child was getting occupational therapy. But if you see a biomedical doctor, it may be less clear, for example, on the receipt. And you don't send any of those, just as you keep your doctor's letter in your file, you don't send the receipts with your tax return. That's all kept as backup. It's for you. If you have someone else prepare your taxes, it's for your tax preparer, so that in case of audit, you have a paper trail to substantiate your deductions. As far as filing your paperwork, you need to find a system that works for you. Because I'll tell you a little bit about my system, which may or may not work for you, but if it doesn't, we always say if it doesn't work for you, it's not going to work. You have to have a system that you're not going to use it if you're not comfortable with it. If you use programs like Quicken to track your financial information, that can actually be very helpful in generating a report that you can use to track your deductions. If you don't, and you're just sticking with paperwork, or you're creating the paper backup to your Quicken file, file everything regularly. For a lot of our kids, you end up with a lot of paper, and if you just start piling it on your desk, it's going to get out of control very quickly, and you're not going to want to deal with it, just as a practical matter. There are also scanners now that you can get that you can scan receipts in and keep digital copies of it and eliminate some of that paperwork. If you're doing a lot of taxi cabs in the city, for example, or a lot of grocery store receipts for special foods, you might consider just a place in your wallet or in your pocketbook where you always stick your receipts so that, once a week or whatever, you can pull them out, file them away, and you get in the habit of doing this, and it just streamlines things. I've given in the presentation just some places where you can get filing systems that are easy to use, fairly priced, and you can see all different types of filing systems to see what might work for you. And this is what I use, and I've used it for a number of years. Next slide, yeah, and have found that it works for me. I have these two big plastic file folders from the Container Store. I have a big one and a little one. And in the big one, I keep my large, I've organized it so that I have flex spending forms, what I've submitted to Flex, what Flex has paid. The same thing for insurance. If there are things that I don't submit to insurance for whatever reason, I keep those in a separate file. Supplements, labs, books and therapeutic toys and tools, and then other miscellaneous things. And in the smaller file, I actually keep the smaller receipts: taxis, gas, tolls, rental cars, grocery, prescriptions, because those are all potentially deductible. So if you think an expense may be covered by your insurance, the first thing you should do is submit it to your insurer. We've had some insurance people come and talk to our NAA group, and one of the interesting pieces of information I got from them was that if you're mailing your claims by mail, you should submit them separately. They're far less likely to be lost if you submit 20 claims together. They may process 15 of them, and the other 5 go missing, and you're tracking them down.
And send them certified.
Yes. A lot of insurers are now accepting things by fax or email, so you can do that too, and save a fax receipt if you get it. Save, the proof that you sent your email. You save your sent email. Keep a copy of whatever you send to the insurer, because if they lose it, you then can very easily resubmit it because you have everything right there. What I do is I keep a copy of my claim form and the receipt together, and I note at the top the date that I sent it so that I can also look and see if it's been 2 months and I haven't heard from my insurer. I can call them, either they've lost it and I need to resubmit it, or they need more information. And if you have a doctor who files insurance directly from their office, keep a record of your visit and kind of pay attention to what you're getting from your insurance company. You can often go online and see which claims have been paid, and just note whether or not those have been paid too. So you submit it to your insurance processes it, you get back an explanation of benefits, hopefully you get back a check too. You should make sure that it's accurate for starters, and if it's not, contest your claim. If your claim's been paid in full, I just mark it paid and put it in my paid file. If not, and if you have a flex spending plan through your employer, you can consider submitting the portion that wasn't paid by your insurer to flex spending, because that's still a potential flex spending deduction. And then, this requires a little bit of paperwork and paying attention to things. If flex pays everything, then you don't have a tax deduction for that particular claim, and you can move that to a file to separate it from your tax. Your potentially deductible tax paperwork. Yes. Yes.
Is there an age limit for children with disabilities, especially like 12 or 13?
For flex spending cutoff, I don't believe so.
I don't think so. No.
The question was whether there was a cutoff for age that you could deduct flex spending amounts. Are you talking about dependent care flex spending or medical flex spending? No, I don't think there's an age cutoff.
No,
I mean, if it is, it's an adult.
No, I mean, the way a flex spending plan works is whatever your plan is, you have some predetermined amount that you put aside. You spend it, right? Use it or lose it. Is that?
Mm-hmm.
So.
And I don't know if there's an age limit, and if it's different for special needs children versus neurotypical children for dependent care flex spending, which is separate from medical flex spending, and some employers offer that as well.
And one thing that I think we missed when we were talking about flex spending plans is when you're deciding what to pay with your flex spending, there are certain items that they'll allow in these plans that might not necessarily be a so-called medical expense that your provider might allow for. Those items should certainly be considered the first dollars that you spend with those plans.
Right, exactly. So when you're looking at how you're going to divide up and sort of conquer your expenses, if you have insurance coverage for something, that's where you go first. You want to use your flex spending dollars to sort of fill that gap between what insurance won't pay for and then expenses that may be flex deductible expenses that wouldn't be insurable expenses. So you're just spending your money wisely. If I have $100 bill from my doctor, and my insurance is going to pay $70 of that $100, I'm going to submit it to the insurer first, not to flex spending first, because I'm eating away at my flex spending amount and not taking advantage of my insurer amount. I could just reduce my flex balance by $30 versus by $100. So as I said, you're going to need to sort of trace through your explanation of benefits to figure out your potentially deductible tax amounts. The basic questions you're asking yourself are, did your insurer disallow any part of your claim, and what amount was that? Did you have a copay? And which portion of your out-of-pocket amount, your copay and your disallowed amounts, did flex spending actually reimburse? What's left after all that is your potentially tax deductible amount.
And just as a side note, copays are good medical deductions.
Yes. So your as Mark said, your deductible amounts include, not covered amounts. So for example, sometimes your doctor may charge more than what is the ordinary expense in your area, and different insurers define ordinary expenses differently.
More often than not.
So if your doctor charged $200 and they've decided the ordinary expense amount for that should be $100, that other $100 may be not covered, and that's a potentially tax deductible amount. If what's not covered is a reduction in fees because your insurance company has an agreement with your doctor or provider, that's not deductible because you're getting the benefit of that amount as a deduction in your insurance. Copays are deductible, and any deductibles that you have to pay are also deductible. Most people's plans have $1,000, $1,500, a couple $1,000 amount that you have to reach before your insurance is going to kick in on any annual basis. So those amounts are deductible expenses. And if you have, if your plan is a plan with co-insurance, for example, an 80-20 plan or a 70-30 plan, the portion not covered by your insurer is again a deductible amount. So you need to familiarize yourself with your own EOB, and everyone's looks different. This is up until 2 weeks ago what my EOBs look like, and my insurer just changed them completely. So you can see on here, can you go to the next one too? There are all different types of amounts that you can look at to see what's deductible, and I just discussed them. You have the provider charge, which shows, this doctor happened to charge, this was an X-ray, $125. They allowed $36.10 of it. They didn't pay $88.90, which in this case I actually think was a deduction based on the service agreement. Any remaining amount on my deductible would have been a deductible expense, and I had a $25 copay for that. My benefit ended up being $11.10. And what I end up with a tax deduction in this case was my $25 copay because the other amounts are accounted for. But there were other potential places with, for example, a doctor bill where you might have had additional deductible amounts. As we said before, use your flex spending dollars wisely and use your insurance dollars wisely to make sure you're getting the full advantage of what's available to you. Your best practice is to keep receipts and to document everything in case of an audit. One expense that we didn't talk about, and this is a receipt thing because it's a matter of keeping track of things, is if, for example, you get medication from a compounding pharmacy, the shipping from the compounding pharmacy, which actually can often be fairly expensive, especially for things that have to be shipped overnight and on dry ice, those expenses should be deductible as well. And also transportation costs. We talked about transportation costs to doctor's appointments, transportation costs to special needs schools. Transportation costs to a health food store should be deductible as well, as long as your primary purpose is to buy food for a special diet. And similarly, if you're buying gluten-free, casein-free food online, those shipping expenses should be deductible as well. Mark had talked about using your car in connection with medical expenses, and you can take the standard mileage deduction rate and keep a mileage log. It's something you can stick in your glove box, for example. And if you take certain trips regularly, you drive to and from school and it's 10 miles each way. You don't have to write down, I went 10 miles today. You'll know your standard amounts, and you can reconcile that either regularly on your calendar at year end.
But generally the log should be date you took the trip, who you went to go see, who was being treated, what was the medical purpose.
And the log can be handy because you don't also want to get in a situation where you have a stack of receipts at the end of the year and you can't remember if you went to the doctor that day or not. You know, you have all your receipts from Exxon from getting your gas and you don't know what's what. So it's good to keep track of it and keep that log.
That's right on the receipt.
Yep.
Right on it.
Yes.
You know, I had mentioned earlier, you find a system that works. I find I like to pay for all my medical expenses with my Amex card because I write on the Amex bill every month what it was for, and you get an annual recap from Amex, and you could really identify it in one spot, and then, you know, try and locate all those bills behind it, and I think it's a system that works for me, and I think to Kim's point, you find the system that works for you and you go with it.
Right, and I think that's a good point. If you just have one credit card that you use only for medical expenses or get like a second card, that's your whole medical expense log.
It's really a good idea to try and, you know, put it in one spot because, you know, this process could overtake you, you know, with paperwork. So my recommendation, as I told you, is try and find a system that works for you and work within that system.
Can I just make a suggestion? Something that I do because I'm a representative payee for my Social Security benefits. And as such, I have to report to them annually what I spend. And it's categorized by clothing, food, and so on. I just created an Excel document.
Correct.
And I post to it weekly. So if I, you know, pay for lunch or buy them a snack or whatever it is, I post in there, and then I can sort the Excel document. If I want to sort it by date, I can sort it by category, or, you know, vendor. It's so much easier to work with over the course of a whole year. You can't believe, like, I had like 9 pages of expenses.
I believe it. I believe it.
One of our participants was just talking about, for those of you on the webinar, the method she uses, which is an Excel spreadsheet where she has certain categories of things that she keeps track of, the dates that she incurred those expenses, and then she can sort it by category or date. She does it on a weekly basis so that it doesn't become overwhelming, and then at the end of the year she has a full record of what she spent.
I include the date, what the purpose of the expense was, and who I paid, and the amount, and the category, and then I have another column, last column, is how I paid for it. Under the family ATM card or his own personal ATM card, or, you know, by check, and I annotate the check number or the credit card that we use.
Sounds like a good system.
Yeah.
So credit card monthly statements. I keep all my card statements in a separate file, and at tax time I take them out and I highlight the various expenses on them. You do it on a monthly basis. I sometimes do it as I'm putting the credit card receipts away. And they often span categories too. You know, I'll use my Amex to pay for charitable contributions as well, so I want to make note of those because those are deductible as well. And I keep copies of those in a general tax file so that I can refer to the different, as I'm doing my taxes, I can pull it out and say, okay, you know, this month's Amex or with my end of the year report, okay, here are all my charitable deductions, here are all my medical deductions. And you should make sure, if you're not the only adult in your household who is incurring expenses and keeping track of expenses, that everyone is on the same page. So if you have a spouse or a partner or a caregiver, a babysitter, who also may be going out and buying things that are potentially deductible expenses or traveling with, you know, for medical purposes, that they know to save receipts and to keep them in a central location so that you're not missing out on deductions because someone said, oh, you know, yes, we took, you know, 6 cabs this week and spent, you know, $100, and we have no receipt to back that up. So I always recommend, and this, it does get to be a lot of paper and not everyone does this, I save, for example, all my taxi receipts.
God bless you.
I know. I also pay with a credit card, so I have that little backup check. They're usually de minimis expenses, but particularly if there's a mode of transportation that's your primary mode of transportation. I live in Manhattan. Many days, my son and I go to a school in a cab. 5 days a week, 10 months a year, it adds up. So even if each cab trip is $10 or $12, which is a de minimis expense, at the end of the year, it's not so de minimis if you have several hundred or several $1,000s.
I just want to interject on that one point. There is what is known as a de minimis rule that says that the IRS says you don't have to keep every $5 receipt and so on and so forth. I forget what the threshold is. I think it might be it's either $25 or $75 per day of these type of undocumented expenses, but that you don't necessarily need this taxi receipt. You might be able to just log it down. But as a good general practice, it's always good to have them, because whenever you're in question, you overwhelm them with paper, and you're going to be much better off.
Does it seem reasonable that if you have an expense that's reoccurring weekly, for instance, I take my son to a counselor, and I know it's like 8 miles from my house, 8 miles back, that I can estimate the cost?
Well, the question is, if you have a recurring type of expense, such as going back and forth to a counselor, and it's 8 miles each way, I would just say, on a piece of paper, you could just say every week you incurred this 40 miles times, if you went 48 weeks out of the year, and you have whatever the math turns out to be, somewhere around 2,000 miles. And yes, that would be, I believe, acceptable by the IRS. Yes.
Because I never claimed any kind of transportation expense, not for my volunteer work, not for anything. But like you said, it adds up. You don't realize.
It adds up, and transportation for volunteer work is also good.
Yeah.
That's deductible as a charitable expense,
As
correct?
a charitable, correct.
So
At different
level,
at different
mileage amounts.
Right. There's another. I think it's like 13.
It's
might
much
be,
less.
It's less. I don't know why that is, but it's less.
This may not be as applicable here as it is, for example, in the city, but buses and subways are also deductible if you take them, and you may go into the city for medical reasons. You can get, a Metro card that you can designate as your medical expense Metro card, and every time you know how much you're spending on it, and that's all you're using it for. Big Brother is also alive and well at the MTA. You can get a Metro card that automatically refills, and you can check where you've gone. So you get an online account history, and I think they keep it for about 4 months, so you have to check it every few months. And you can use your calendar or logbook to kind of keep track of things that way as well.
Also, a good thing to keep track of is Easy Pass statements. Okay. Just look at those Easy Pass statements and highlight where, every time you go over the bridge and wherever I was going to this doctor, and you note it on your statement.
And then back to the cars, and this Easy Pass segues into that. Mark has already talked about being able to deduct you can deduct the larger amount of either the established per mile amount, which was 19 cents for the first half of the year and 23.5 cents for the second half of 2011. 2012 is going to be probably a different amount.
They'll publish a new rate.
I don't think I haven't seen
it yet.
I don't
think they haven't.
So you can keep track of your actual expenses, your gas, your oil, those kinds of things. If that is larger than the per mile deduction, you can take that larger deduction of your actual expenses.
But note, when keeping track of gas and oil, it's a percentage. It's not all of it. It's just a percentage of the cost that you're using for medical expenses. So it's kind of, for example, if you incurred 2,500 medical miles and you had 5,000 total miles for the year, 50% of those type of expenses would be good medical
But they
expenses.
only count oil and gas. They wouldn't count replacing the brakes or...
No, I think it would be your actual expenses. It's not gas and oil. I think repairs would count.
So it's your total upkeep of your vehicle.
You can't, general repair doesn't count.
No?
Maintenance and general repair don't count.
Okay. Maintenance and
It's
general.
basically your general out-of-pocket expenses. And gas and oil are probably the big two with the car.
That's right.
In addition to either those actual expenses or the established per mile rate, in either case, you also can deduct tolls and parking fees that you pay. And your an Easy Pass, for example, would fall into that.
So, for instance, if you drive to the hospital and they charge you $20 for the day for parking, that's a good medical expense.
So planes, trains, and automobiles, if you travel out of town for medical expenses, as Mark said, the cost of travel is deductible if the primary purpose of your trip is to seek medical care. If you happen to be going to Orlando, for a week and you think you'll just pop in for 45 minutes to see a doctor and, deduct all your whole family's plane fare to Orlando, that's not likely to fly.
Unless Mickey Mouse is giving medical
advice.
That's
right. But if you're in Orlando and say you're there for a week and you're doing testing and receiving other treatments and you go to Disneyland for a day to entertain your family, I think that is a qualitatively different
exactly.
trip.
How far would you consider traveling out of town? Like how many miles would that have to take?
I don't think there is a threshold. I mean, you drive.
The question was, how far do you have to go to be considered out of town?
I could stay over, that's justified as a lodging.
I think if you drive somewhere and you have to stay over to get medical expenses, I think that's the threshold.
I think maybe if you can drive to Rhode Island in 3 hours and you're getting treatment in the morning, you go there, you leave your house at 6 o'clock in the morning, you go to Rhode Island at 9 o'clock appointment, you spend 3 hours. Can you justify staying overnight and count that as an expense because it's 3 hours driving back the same day or 6 hours driving?
I think certainly a trip to Rhode Island for 3 hours, you could justify a stay.
And if I were you, I'd go the night before instead of driving at 6 in the morning. The question was, for example, would a 3-hour drive to Rhode Island where you have a doctor's appointment justify an overnight stay so that you don't have to drive 6 hours in one day?
Yeah, I mean, think those, I mean, what if it's like a second hour, when you start getting that hour drive,
I think, it becomes a little less clear and it's a judgment call, and it may depend on your particular circumstances, too. If you have a child who doesn't do well in a car and you can only go an hour a day, you may be able to justify the need to stay overnight somewhere.
It will be facts and circumstances.
Mm-hmm. You can also, to your question, you can deduct lodging at $50 a night per person. So if your family of 6 is going, you get $300 a night for lodging. Your family of 6 may not all need to go. If 2 of you go, it's $100 a night. Meals, however, when you travel out of town for medical care, are not deductible. The only person whose meals would be deductible would be a person who's receiving inpatient treatment, and that's going to show up on your hospital bill anyway. And as Mark had said, the same is true if you're traveling out of town for a conference, for example. You can deduct your transportation to the conference, and from the conference you can deduct whatever you paid to attend the conference. You can't deduct, in that case you cannot deduct your hotel and you cannot deduct your meals. So you have all this stuff and you're getting ready to file your return. As I said before, it's important to really keep yourself organized in whatever method works for you to stay organized throughout the year so that it doesn't get to be March 1st or April 1st or April 10th and you're panicking because you've got thousands of dollars in medical expenses in, a big Rubbermaid bin in your office. For each category of expenses, organize things in a way that works for you. For example, put all your EOBs in chronological order, or if it helps you to separate your EOBs by provider. And and then chronologically that way. Whatever makes it easiest for you to organize your materials and access the information. We had talked about creating a spreadsheet already, and one of the attendees here talked about her spreadsheet. Some of the things I recommend including are the category of expenses, prescription, doctor, lab, speech, OT, the name of your provider, who incurred the expense, and I just have a column where I use the first initials of my family member's name, the amount of your potential deduction, and the type of documentation you have to support it, an EOB, a credit card receipt, etc. This can actually be very handy if you don't prepare your own taxes to give your tax preparer too, because it sets things out for them very clearly. And sometimes if a tax preparer isn't used to doing taxes for someone with a child with special needs, they may need some help and assistance in learning what deductions are potentially available, because as we discussed earlier, there are some unusual deductions which can actually have big benefits for families of children with special needs. If you are using a spreadsheet, you don't have to reinvent the wheel every year. Just use the same one over. It makes it easy. Everyone gets into the groove of using it. One of the things we talked about earlier was being on a special diet and what costs are deductible with respect to special food. So kids are on gluten-free, casein-free diets, specific carbohydrate diets. These tend to be more expensive than typical meals are. You can deduct the difference, as Mark said, between the cost of your special food and the equivalent normal food. It may be worth, sometimes the deduction just isn't worth, the amount of paperwork that you go through to do it, frankly, doesn't always make it worth it. What you might consider doing is tracking the information for a couple of months and seeing if you're really reaping a benefit from it, and then going forward from there. Because it really is tedious. But if you're not seeing a big deduction,
I would recommend identifying the big ticket items that are, for everybody, they have a specific big ticket item that really feels, much more expensive than what the regular dietary equivalent would be, and tracking that one. Because otherwise, the paperwork with that could it could just overwhelm you. So identify it and go with it. Just remember that if you decide that, as a general rule, I want to eat organic as opposed to non-organic, that differential is not a deduction.
Right. Again, that's just for your general good health, not for a specific medical purpose. So when it comes to figuring out what the cost, if you're not, if you're buying all gluten-free food and you're not buying regular bread, you may not know how much a loaf of regular bread costs anymore. Case in our house. So you can use websites like Fresh Direct, or other grocery stores have websites where you can actually just get sort of the cost, the current cost of a normal product. Definitely some math involved here, because oftentimes, as many of you probably know, the sizes of packaging for special food is different than the sizes for regular food. An organization called TACA actually has a great template on their website to help people track it. Their website's TACANOW, TACANOW.org. Just as a quick example of the special needs math, the math involved in doing this, flours, I think, and oftentimes you can spend a fortune on almond flour and other flours. Most regular flours come in 5-pound bags. Special flours are usually like 1-pound, 2-pound bags. So if you have a 5-pound bag of, gold medal flour, and it's $5, it's $1 a pound. But your 2-pound bag of rice flour may be $8 and it's $4 a pound. So your per pound difference is $3, and you have to do the math to kind of multiply that out to see what the difference is. So you end up, in this case, with a $6 per bag difference, and that would be your deductible amount. Your $8 isn't the deductible amount. See how fun this is? It's really something you really want to do all the time.
And who thought you would never get to use algebra all over again?
That's right. And that's why we recommend, doing sort of a small trial of testing whether or not it's really worth it for the deductibility of those expenses. If you're spending a lot on prepared special diet food, it may end up being worth it. And if you're spending a lot on things like flowers, which are really one of the bigger ticket items I think that people find, if you're not spending it on that and just, eating, grass-fed meat and vegetables, you're not going to end up with, and buying, the occasional package of gluten-free bread, you're not going to end up with a deduction that's really worth.
And once again, it should be that you're on that special diet because there's a medical reason to be on that diet,
Yeah.
not, I heard gluten-free is kind of a good way to eat. I'm going to eat gluten-free. Well, that's just a choice, a personal choice, not a medical choice.
Right. But if your doctor says, Kim, you have a really serious problem with inflammation and you need to be on a gluten-free, casein-free diet, then you're dealing with a specific medical condition, not just because you want to feel better. After you filed your return, keep copies of everything you send to your professional tax preparer. Move it all, at the end of the year, move it all to a file and start the next year.
And
keep it in case of audit. And how many years?
I get a lot of questions about document retention. As I explained to you, these are the general rules, so it's really a personal choice. As me, I probably have never thrown out any of my stuff, but it's 3 years from the date that you filed. So once again, it's if for your 2008 file, once you if you filed by April 15th. 2009, April 15, 2012, that year is closed, which means the IRS cannot come back to you and say, we want to audit that year. That year is closed, unless there are exceptions. Fraud. If they suspect fraud, those years never close. And then there's another exception. Without getting technical, it's if you've understated your income by, I think it's 25%, I think there's a 6-year threshold. So make your own choice. People call me up and they ask me how long I should keep them. I explain the rules to them. My recommendation is to scan everything and toss everything. But go paperless.
But the general rule is 3 years.
3 years from the date of filing. If you're not someone who's committing fraud and not someone who's understating their income, 3 years from the date of filing.
And just to wrap it up, the information we're giving you here is for informational purposes, and everyone's tax situation is different. So we recommend, that you consult with your own tax professional in the preparation of your return to make sure that the deductions, that you're getting all the deductions that are available to you and are appropriate for you to take. And we can do Q&A both from online and live.
Great. All right. I'm going to take some questions from the webinar folks. Thank you guys for hanging out. We will have this presentation, again, it's being recorded. It'll be available on the NAA website. We have actually YouTube channel where you can review the presentation. Also, Kim and Mark will make it available via email if someone wants to see this presentation in a hard copy or printed out at their own convenience.
And if you're online now, my email address is actually the contact email address on the GoToWebinar. So you can just email me and we'll get it to you.
Yes, that would be a good dental expense, yes.
The question was whether orthodontic work was a deductible medical expense.
Dental expenses are good medical expenses.
So since they're raising from 7.5 to 10%, if you're to go for orthodontic, front-loaded?
Maybe. I don't know.
Our orthodontist makes you pay everything in advance. So, yeah.
Well, to your question, it would be a specific point. So if you thought your income was going to be higher in 2012 or 13, it's a mathematical equation. It might be beneficial to pay for it in 2013, even though the threshold is 10%, because maybe you didn't incur a lot of expenses in 2012, and you definitely weren't going to eclipse the 7.5%, but you might have a better shot in 2010, in 2013.
Okay. Oh, great. We have an audience question.
It's more on the therapeutic school. You say to pay tuition for therapeutic school. What is considered a therapeutic school?
Well, there's a technical definition actually in the pub.
So,
Give us 1 second, we'll find that for you.
it's right here. Generally speaking, if you're sending your child to a school to deal with the primary reason for sending your child to that school is to deal with your child's special need, it would qualify as a medical expense. I'll read you what the IRS has to say on it. You can include in medical expenses fees you pay on a doctor's recommendation for a child's tutoring by a teacher who is specially trained and qualified to work with children who have learning disabilities caused by mental or physical impairments, including nervous system disorders. You can include in medical expenses the costs, tuition, meals, and lodging of attending a school that furnishes special education to help a child to overcome learning disabilities. A doctor must recommend that the child attend. The school, overcoming the learning disabilities must be a principal reason for attending the school. So I don't know your child's personal situation, but the primary reason for attending the specific school must be to deal with whatever disability you're dealing with.
So you said, what if you pay for food?
At the therapeutic school, the food would be deductible, yes.
What if you have to send the lunch over there and you pay?
Same concept.
The question was, if a special needs school provides food that you pay for, is that deductible? And if you send in a lunch to the special needs school.
So it's, and I will read it again. It says you can include in medical expense the cost, tuition, meals, and lodging of attending a school that furnishes special education to help a child to overcome learning disabilities. So yes.
Suppose your school district sends your child to a special therapeutic school, which my son does attend, and they don't provide lunch. And we have to either give him money for lunch every day or make him carry lunch. Are those expenses sent to him? Even though the school district is paying the tuition?
I think so. I'm not 100% on that one. Oh, go ahead.
The question was whether if your school district sends a child to a therapeutic school, and the school district is paying the tuition cost and the transportation cost, but the school doesn't provide lunch as part of what the school district pays, so you either have to pay separately for the lunch or send the child in with the lunch. Would those expenses be deductible?
It certainly feels that way when reading the pub and the law.
So will a pound of lunch and meat if it's not enough?
I would, you know,
Guesstimate.
guesstimating is okay. It's, you know what? Again, you get back to what you said before. I drive 8 miles each way 5 times a week. I spend $3 a day or $5 a day, and you kind of figure it out and go from there.
Well, what I do for his Social Security benefit, I put in gas to and from, say, therapy for the year, and I leave the amount blank. So I'm telling Social Security I'm not charging against his income for that, I'm paying for that. But it is something that I probably could, but I don't. But for tax purposes, I have to come up with some kind of an estimate of what we pay.
Yeah.
So, great. These are great questions. We have another question, which I think we covered in the presentation. iPads for communications, are they deductible? And the answer was yes.
Yes. If the primary purpose is to use it for a communicative or a therapeutic device, it'll be deductible along with the cost of the apps that you use for that. For example, Proloquo 2, Proloquo to Go.
Proloquo to Go, yes.
Is about $300?
200, I think.
$200 or $300. So that's that's a chunk of money. But that app is clearly for communicative purposes. If your child's using, as Mark said, if the iPad is so that you can have an hour of peace and quiet in the evening while your child watches YouTube videos on the iPad, not a therapeutic. It may be therapeutic for you, but it's not a deductible expense.
And then another question is about the cost of the Linda Mood Bell reading program. Would that be be able to be used as a medical expense deduction?
I'm not familiar.
I am actually familiar with the program.
As long as you have a note from...
As long as you have a therapist or doctor recommending it. If the tutoring is provided by specialists who are specially trained and qualified to work with children who have learning disabilities, then a program like that would be deductible. That's Linda Mood Bell. It's a reading program.
My son sees a tutor weekly. Oh, well, he did for 3 years before the school district. We just fired her. But I pay for that weekly. That's a deduction that I can count, right?
Yes, if she has qualifications to teach, especially, yeah.
So tutoring,
tutoring expense by someone who's qualified to teach children with special needs is a deductible expense.
Correct.
Great. Somebody had a suggestion from our webinar audience that you can also categorize on your medical expenses using mint.com, MINT.com.
What is that?
I'm assuming
it's an online financial tracking website and budgeting website.
Equivalent to like Quicken.
Yeah.
Mint, like
you go to the mint and get money.
MINT.com.
Thank you for that.
Yeah, thank you for that. Is the cost of setting up a special needs trust deductible, so the legal costs, which could be thousands of dollars to set up a special needs trust?
I'm not certain on that point. I seem to remember reading somewhere that it was not, but I'd have to check on that one. So I'd be happy to follow up on that point.
If whoever had that question can email it to me, then we can have your contact information and we can get back to you with that.
Yeah, so do they have your email?
My email is the contact email on the webinar. So.
Pardon?
Some of the money that you're putting in the
trust to pay the legal costs.
Is that a medical expense? Is that your question?
Medical expense, that's because of special needs, it's not.
Right.
So it's right. If the answer turns out that you cannot use your the cost of a legal expense as a medical deduction, then the suggestion was to use money from the special needs trust, which is pre-tax, to pay for those legal expenses. Then we have another question here. My child turned 18 in September and got her first Social Security check in mid-November. Is there any filing to do when they turn 18 and have Social Security money?
Filing requirements it's an income threshold. I don't know what the exact amount that they received, but it's possible that there could be a filing requirement.
And it depends on whether
So
when you're doing your own taxes.
So yeah, and so only a certain percentage of your Social Security benefits would be taxable. You're going to get a form from the government, a 1099. It's not 1099. I think it's SSA 1099, and it'll identify the payments you received, and depending on what income level you're at, a percentage of it or none of it might be includable. So it's a maybe answer.
So that's specific to your own situation.
It will be specific to your own situation.
Great. Thank you. I think we've answered all the questions in the webinar for now, and we have another audience question. Go ahead.
Make sure that I have the right answer. I think I have it, but I just want to clarify it. If I hire, which I did, I hire a lawyer to assist me to get a right program for my son. That is considered a medical expense because I'm trying to get him into the program. I'm not getting reimbursed.
You're not. You've incurred those legal expenses to get them into the program, not to seek reimbursement. And in those cases, I think it is a good medical expense because the primary reason that you're incurring those legal expenses is to get medical expense, is to get medical care for your child. So I think in that case it would be.
So the question was, is there a difference in deductibility for legal fees paid in order to get your child the appropriate educational program for your child versus legal fees that you're paying in order to obtain reimbursement, for example, for private school tuition that you paid? So that was the question Mark was answering.
Correct.
Does anybody have any more questions from our live audience? Any more questions from?
I have one more question.
Okay, great.
I did have to educate my tax preparer about medical deductions. And I have publication 502, but this is for 2010. I didn't need it for last year. I didn't think I needed it for last year, so we just followed the same rules. You know, the tuition for the tutor, I mean the expense for the tutor, and all our medical is deductively listed them. Have there been any substantial changes in the 502 publication?
You know, there really hasn't. The real change.
The question is whether Pub 502 has changed substantially from 2010 to the 2011 version.
So the question is, have there been any major changes in the medical deduction law? And really, it's just a rate change on the amount of mileage. But really, it's been pretty quiet in the area. The big change, as I highlighted earlier, is the 7.5% to 10% in 2013. I think is going to be pretty significant.
And I might have missed it because I'm helping with the slides. This is Lisa. Child care, babysitting, you know, for your child if you're out talking to a lawyer or you're out or you're having your other children cared for while you're bringing your child to a doctor's appointment. Are those things potentially deductible? Or am I on the edge here, Mark?
You're somewhat on the edge. But that's a personal. So the question is whether you're incurring, it depends, okay? So you're getting into the area of dependent care type of expenses, and how old is your child, and is it a dependent care expense, is it a medical expense? I think.
Well, instead of bringing them to the lodge, you know, with us when we travel, I mean, you know, it would just be what's the most cost-effective outlay. So if the outlay was I had a babysitter watching my children while I brought my son to a doctor that we had to stay overnight, or on a flight, you know, it's an outlay issue for a lot of families. So that's the question, and so one would make a choice. But if I knew that it was, you know,
I'm not certain on that point. I think you're right in the middle over there.
Okay.
One thing you can look at, though, is if your employer offers dependent care flex spending, you can use those pre-tax dollars to pay some of those expenses if you don't qualify for dependent care deduction in those circumstances.
Great.
Now, if it was
Is
a case,
tax deductible because I'm here listening to now.
so like in your case, if you had to bring the child who wasn't getting the care with you because you had you just had no way to deal with it, I think that child that you would get credit for that when you're figuring out the per diem rates. So maybe along those same same logic, I think maybe you could get babysitting or dependent care.
And the reason why I hone in on this point is that child care is such a big expense for a lot of families, you know, throughout the year in terms of how they manage the family and manage the appointments and so forth. So thank you. And
just be careful on that point, you know, with babysitting and all that type of stuff. You know, a lot of people pay with cash and checks, and you know, you get
my
into
babysitter takes credit cards. No, okay.
you know, when documenting that with the IRS. So you know.
Okay, great. Well, if we don't have any more questions from the webinar folks, and our presenters will stay around a little bit for any more questions from the audience here tonight. I want to thank Mark and Kim for your awesome presentation, and to everybody who asked really great questions. Again, we are recording this, and the slides and the recording will be available on the NAA YouTube, which will be on our website, a link on our website, and also the slide presentation itself. If you just want the slides for your own enjoyment, we will also email them to you, so please email in to Kim if you would like those. And thank you, everybody, for joining us tonight.
Thank you.
Thank you. How do I hang up my phone?